2022 has been a year in which the stock market has experienced some of the most dramatic volatility in some time, and some of the biggest downward moves we've seen in quite some time. And I don't think anybody's even prepared for what's about to happen starting in about 2 weeks from now, roughly. And this move is going to be, in my opinion, the cherry on top of 2022. And I want to share with you guys exactly what's about to transpire here and how absolutely no one, and I mean absolutely no one, is ready for what's about to happen. And I keep up with everybody's opinions on the market and kind of what other people are thinking and things like that. And no one's even on the same frame of thought that I'm going to share with you in this video. And I think it's very important, or you're going to be caught off sides in a massive way, because everybody is prepped for a certain something happening that I think the odds of this thing happening are actually very low, and the odds of this other thing happening are absolutely massive, and it'll create arguably the biggest move for the stock market in this entire year. Hope you guys enjoy this as always. Thank you so much for everybody that's subscribed to the channel. I appreciate each and every one of you, okay? All right, so where we're going to start this story out here is this is when I'm expecting this insane move for the market, essentially, okay? It's going to start right around the, let's call it the third week of October, roughly, for the market. And then it will continue for about a month and a half after that, essentially, okay? Now, I think it's very important to understand where the rest of the market's at, okay? I challenge you. Turn on CNBC for a few hours during the trading day, okay? And what you will find is 9 out of 10 people that go on there are very pessimistic or very bearish, okay? And these are all Wall Street people that they have on CNBC all day long. And all day long you can watch it and they're pessimistic. Almost no one is bullish. And that's the state of the market. And if you ever get the 1 out of 10 people that go on CNBC and actually are optimistic, it's almost always from like a long-term perspective. They're not bullish really on the short term. So there's absolutely no one on Wall Street, almost no one on Wall Street, that is bullish on anything short term for the stock market, okay? It's very important to understand. If you look at the AAII investor sentiment, how do investors feel for the next 6 months? We just saw the biggest bearish number we've seen this entire year. But not only that, even in the Great Financial Crisis, there was only 1 week during the Great Financial Crisis that was a higher bearish number than what you're seeing right now, okay? Around 61% of investors are bearish on the stock market for the next 6 months. So, they all are convinced that the market's going down. Only 17% bullish, which is one of the lowest numbers you'll ever find out there, okay? So overall, pessimistic, bearish, nothing to look forward to, nothing good for the next few months is where Wall Street's at and investors are at, okay? Now you compound this with the market going through one of the most vicious 6-week sell-offs you've ever seen in your life, okay? Look at this. The Dow Jones has lost 5,000 plus points in the past 6 weeks, okay? In the past 6 weeks, it's down almost 15% in 6 weeks. It's one of the most vicious moves you'll ever see from the Dow. The Dow's not, relatively stable, okay? So the fact that it goes down 15% in 6 weeks is ridiculous, okay? The S&P 500 has lost 15.5% of its value in the past 6 weeks. What about the NASDAQ? Ugh. The NASDAQ has lost over 17% of its value in the past 6 weeks. And what about the Russell? Good old small caps that have been absolutely decimated for a while now, okay? Well, Russell is down 17.7% in the past 6 weeks. So not only are people's words in terms of their bearishness commentary, in terms of things like investor sentiment and things like that, not only is that just awful, pessimistic, bearish, but you have the indexes that have performed like that, to be quite honest. But that's just kind of the tip of the iceberg. What if I take you through a few stocks? I want to show you just a few stocks here for a moment and show you how bad those have been hit in the past 6 weeks, okay? Look at Meta stock. It's lost 25% of its value in the past 6 weeks. And every single one of these stocks I'm about to show you has already been obliterated in 2022, okay? It already got destroyed. And this past 6 weeks is just kind of the extra cherry on top, okay? 25% in the past 6 weeks. Shopify has lost 29% of its value in the past 6 weeks. Google McDougal, the invincible, not so much anymore, has lost about 20% of its value in the past 6 weeks. Amazon, amazing Zon, 21% down in the past 6 weeks. Mr. Softy, Microsoft, down almost 20% in the past 6 weeks. I mean, come on. You seriously? Nvidia. Nvidia. I mean, it's been an awful year for Nvidia stock, but this stock took the lowest leg lower, okay? 35% down in the past 6 weeks. AMD, 33% down in the past 6 weeks. These are historic. I mean, absolutely historic moves for these stocks, okay? So to recap this story so far, stocks have been destroyed all of 2022. Stocks have been really destroyed the past 6 weeks. And everyone is super pessimistic and underweight equities, okay? That's where we're at right now in this market, okay? Now, earnings season is coming, and no one is prepped for what's about to happen, okay? Now, Friday, October 14th is when things get kicked off for real, okay? And JP Morgan earnings are going to start the show, okay, on Friday, October 14th. And then after that, it is a gauntlet of earnings week after week after week, culminating in the biggest week, which will be the Halloween week for earnings for companies, okay? Now, imagine this scenario for earnings season. And the more I've looked at this, and I really spent some time over the past, let's call it 24 to 48 hours, and really like processes, and really just thought about this. And I'm imagining this scenario potentially playing out. And I think it's actually fairly realistic. But I don't think anybody else thinks it's really very realistic based upon pricing action, based upon commentary, and all those sorts of things, okay? And imagine this scenario for earnings season, okay? Imagine revenue and EPS comes in with a lot of hits and beats, so a lot of, let's just call it, it's not a disaster when it comes to revenue line items and EPS line items. No, I don't think it's going to be a disaster. Here's why, okay? Basically, if we had a bunch of companies that were missing huge revenue and EPS, they would have already pre-reported at this point in time. We haven't seen anybody pre-report numbers. We're already at the end of September, right? So everybody's quarters are just about pretty much done at this point in time. So if companies were already really scared about, this quarter, we're not even close to our numbers, they would have already preliminary guided. They would have already said, hey, revenue is going to probably come in, ... number. It's going to be way under what Wall Street's expected, way under what we were expecting. We haven't seen that from almost any companies. Same thing with EPS as well. So that kind of gives me a thought process here of, maybe it's not so bad out there. Big tech. Imagine big tech comes in pretty strong with numbers, right? They've all been priced like it's the end of the world other than Apple. But even Apple, think about this for a moment. From what I'm hearing, iPhone 14 is selling better than iPhone 13 sold. If iPhone revenue goes up this year versus this, let's call it 2023 versus past year, there's no way you can really get Apple stock down in any meaningful way because services is going to continue to grow no matter what. Like that's going to grow year after year after year. So you always got the services and ad business that will just continue to grow year after year after year, okay? But if you tack on the fact that this iPhone 14 might end up actually outselling iPhone 13, and then you tack on that next year's the next big cycle for iPhone, I don't even own Apple stock, and I'm certainly not the most optimistic person, but when I'm hearing iPhone 14 is selling better than iPhone 13, how can you be bearish on that stock? Because services revenue is going to come in and continue to be a beast, and advertising revenue is going to continue to come in and be a beast, and that's what drives Apple's business model. It's iPhone and it's services. Services we know is going to be good, and if iPhone's better, oh my gosh, what do we have to go after to push Apple stock down at that point in time? We got nothing, okay? So imagine big tech comes in strong, and once again, these numbers don't have to knock everybody's socks off. When you're dealing with a bunch of stocks that have been wrecked, they don't have to come in with these unbelievable beats. But Amazon's famous for coming in with nice beats, and they set the bar pretty low for them, for Amazon, right? Very low. They set the bar. Meta, if they just report that they sold 3 apples during the quarter, I mean, shoot. If they sold, a bunch of bananas during the quarter, I mean, that's probably good for Meta. I mean, the stock will probably go up 20%. Google McDougal, it's being priced for the end of the world, right? Okay, so if big tech comes in decent, is Microsoft really going to report bad numbers? Think about this. I don't own Microsoft stock, but no, there's no way Microsoft's going to report bad numbers. There's just no way. It's that recurring revenue stream. At the end of the day, if people are using Microsoft products, they're going to continue to use that suite of products. So it's really hard to be big time bearish when all those stocks have been obliterated, right? Now, third thing, imagine a scenario where commentary is not end of the world on all these conference calls. I think Wall Street's thinking that all these CEOs are going to be like, oh man, business is so bad. It's, next quarter is going to be horrible. I don't think that's going to happen. I don't see that happening. I think Tim Cook, who everybody's going to be looking at, I think he's going to be probably relatively optimistic actually on the conference call, especially if we're talking about a scenario where iPhone 14 is outselling iPhone 13. It's going to be impossible for him not to be optimistic on that call, right? Now, imagine companies say inflation is cooling. I think this is a very realistic possibility. Everything I look at every single data point says inflation is cooling massively right now. I think, a lot of these Wall Street folks are expecting that companies are going to continue to say inflation's a huge problem and things like that. I think every single company is going to say the situation's getting far better than worse. And I think that's going to be almost every single company. I own so many different companies in so many different industries, and I look at all the costs that go into their businesses and things like that. I'm telling you, every single one of those is in a much better position for the next few quarters than where they were a couple quarters ago. Let's just put it that way. In terms of container costs, in terms of trucking fees, in terms of the commodities that if they're making a product or service that they have to put into that, every single thing for those companies is pretty much getting better. And so from that standpoint, I think companies are going to actually say this inflation thing, it's been a big issue for us, but it's becoming less and less of an issue moving forward. Okay. I think companies are going to be very optimistic about their margins because of inflation cooling. And a lot of those companies have already done their price increases. So I think they're going to be rather optimistic about margins for their businesses. And I think if the market continues to struggle for the next 2 weeks, that gives us even more fuel for the fire, because then you're talking about the market being even more oversold, tons of these stocks being even more oversold, going into what I think is going to be actually a rather not disastrous earnings period. Oh my gosh, okay. And that's how you set up for an absolutely epic, colossal move in the market. Now, here's the next part, okay. If you look at what Wall Street's expecting, they're not expecting anything what I just went over there. They're expecting revenue and EPS misses. They're expecting big tech to be weak as far as their revenues and EPS goes. They're expecting commentary to be end of the world. They're expecting companies to say inflation is still hot still a massive issue. And they're expecting companies to be very pessimistic about margins, okay? So that's what Wall Street's expecting. And I don't see it. And I don't think anybody's even prepped for this potential other side here, essentially, okay? Now, keep this in mind. This is very important if you want to understand the game of Wall Street. The game of Wall Street is, especially as for actively managed funds, which is a huge portion of the market, right? These folks follow each other around like a bunch of sheep, okay? And they we got to go this way, we got to sell, we got to buy, we got to okay? They follow each other around and they try to keep up with the indexes, okay? If all of a sudden you have earnings, boom, 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 oh wow, this is good, this stock popped, this stock popped, this stock popped, okay? And you have a bunch of people that are very underweight equities going into this earnings season, oh boy, you are going to see the biggest catch-up period you've probably ever seen in Wall Street. Because all these fund managers, all of a sudden, if they're underweight and the market starts to outperform, and until these stocks start to outperform, they've got to get on, man. Because if they don't get on and start buying stocks as well, they could potentially be left behind. If they are left behind, that could be the difference between that's called a very nice bonus, a very small bonus, or no bonus, okay? It's going to be a very big deal. So all of a sudden the fund manager's like, oh, crap, man, we thought everything was the end of the world here. It's not the end of the world. Stocks are popping left and right. Oh my gosh, okay? And that's what happens when you've got the entire street is just extremely pessimistic and bearish, okay? And all of a sudden everybody's playing end of the year scramble to try to catch up to where the indexes are at that point in time, or where these stocks are going, right? That could be a crazy situation. And never mind, what do we see continually in midterm years? October, November into December is usually a pretty good time for the market. And everybody's so pessimistic going into this thing that it's like, oh boy, oh my gosh. And that's why this thing could last more than just a couple weeks of like a bear market rally, a pop or something like that. Because as soon as you get the things going the other way, and these folks aren't prepped for this, it's an end of the year scramble to try to catch up with the indexes, and then it leads to more people having a FOMO in terms of the fund managers. You can't just, as a fund manager, you can't just, if the markets are starting to roar and these stocks are starting to pop, you can't just be there like, no, I'm staying cat. No, you can't do that. You got to get in there then, and you got to get into action at that point in time. It's like, hey man, we're moving. I got to get positioned here. Buy $50 million of this stock, $100 million here. You got to start making those moves. You can't just sit there and be like, oh, whatever, the market's moving up. No, that's how you lose clients. That's how you lose bonuses and all those other things, okay? So that, it's not the first time. This happens a lot. And if you wonder why there's many times a Santa Claus rally, it's because all of a sudden at the end of the year, the market will start moving up a little bit, and next thing you know, some fund managers that are underweight have to try to catch up to the market, so they start positioning, and it becomes like a self-fulfilling prophecy of pushing the market up and up and up and up, okay? This happens quite often in the market, okay? Now, for me, I feel like I always have like a good guy on one side and a bad guy on the other side, okay? And the bad guy is saying, Jeremy, you need to be loading up on November 18th calls, but my other side says, heck no, focus on the long term. I can't do it, okay? I can't, although it's very tempting for me, and I think there could be a lot of stocks that go absolute beast mode, in October and November, to be quite honest. I can't do it, although it is very tempting because almost every single stock has November 18th calls, and I think by that time, a lot of the moves will have been epic, and you've already had most of the earnings at that point in time. But yeah, I can't do it. At the end of the day, I like to just kind of focus long term, and it's very tempting. I'm not going to lie, because the thing you got to understand is with a lot of those out of the money call options that I would even look at for a situation like that, if my situation plays out there, it would be like a 2x, 3x, 4x in terms of the amount of money I make in a matter of, let's say a 6-week span or so, something like that. So that's very tempting, but I'm not willing to risk that capital on a short term, somewhat gamble, right? And although everything's lining up to, I think, potentially being a massive rally there, I don't want to put myself in that jeopardy, because at the end of the day, with those it's not like going down on a stock where you go down, 20%, 50%, whatever it is on a stock, right? And it can come back over time. On a short-term call option, like if the story doesn't play out the way I thought it was going to play out, right? Which in 2022, everything bad that could happen has happened, right? Every time you think, oh, maybe we'll get something good, something bad happens, and it's like, oh, come on, man, can we ever have anything go right? And so if all of a sudden some out of the, crazy situation happens in there, right, that just totally messes up everything, well, next thing you know, you're sitting there with options that are literally expire worthless, and you lost 100% of your money. It's no different than if you invest in a company and goes bankrupt, right? And so that's not a good feeling. So for me, I can't, as tempting as it is for me to buy, $100K worth of options and try to double it up and triple it up, quadruple it up, I can't do it, okay? I got to focus long term. Now, with that being said, this is why I'm operating with a lot of urgency right now, okay? If you notice, I put at least 100K in bought at least 100K worth of stocks in the past 5 or 6 weeks, because the way I look at this, I think there's a much, much greater possibility of major upside in early to mid-October through mid-November, essentially, than if we're talking about downside. I'm very not worried about downside, for, let's call it mid-October through mid-November, to be quite honest. When I just look at how pessimistic the market is, how underweight people are, I think, all these things are kind of risk reward, right? And I think, if I had to put odds on it, I think there's a 90% probability that the market's going to absolutely go beast from, let's call it early to mid-October through, let's call it mid to maybe even the end of November. I think there's an extremely high probability of the market going beast mode in that time, and I think there's a very low probability that the indexes will tank a bunch more on earnings season. If it happens, it happens. I'll be a happy buyer out there. I just don't think I don't think anybody's prepped for the other side. I think even if earnings came in not so good and commentary came in bad, I think in that scenario, I don't even think the market would sell off that dramatically. I would hope it does, but I don't think it will, because so much bad news has already been priced in, so much pessimism, so much underweight of equities has already been priced in. And so that's just kind of what I think about, that whole situation. So it will be pretty intense. That's all I'll say about that. Hope you guys enjoyed this video. As always, if you're looking to join my private stock group, check out the pinned comment down there to get access to everything that's included in there, including our Discord chat, where you can chat with fellow shareholders of all types of different companies, get our access to our private group investor report, also get access to all my course curriculums. Much love. That is pinned comment, and have a great day.